This is the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Any postings and or social media content are the views of the advisor and do not necessarily reflect BMO's position or viewpoint. The information herein is for Canadian residents only and does not constitute any financial, legal, tax, investment, or other advice. Welcome to the Wealth Roundup for the week of June 11th, 2025 with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Hi, Patrick.
Good to see you, Terry.
You too as well. It's been a very tumultuous beginning to the week in the United States of America. How has that affected the markets at all?
Little impact to the markets. I think you're probably talking about what specifically happened in California over the weekend. Disturbing images, obviously, TV and social media. For the most part, the markets, no reaction. The markets seem to be focused on some positive trade news between the United States and China. That seems to be the main driver that lifted the markets up over the weekend and have kind of continued into this week. Perhaps even a hint on the trade front that we might have some news regarding Canada, United States prior to the G7 meetings, which will be happening in the middle of June. So, for the most part, the easiest way for the markets to move has been up. We did see gold kind of flatten out a little bit. I suppose the other thing that happened over the weekend was the Donald Trump, Elon Musk feud kind of rolled into the weekend. We're going to talk a little bit on this podcast about cryptocurrency. Certainly Elon going and throwing the U.S. budget kind of under the bus, talking about the long-term impacts to the U.S. economy. And whenever Elon kind of mentions Bitcoin, it always seems to kind of rally up. So that was something that carried into this week. Oil prices, a little bit of a recovery going to Friday. We saw WTI go up about $4. Western Canadian Select was also up about $4. So good on the oil side. And even on with regards to bonds, we saw bond prices leveled out, yields picked up. So, a little bit less concern, at least temporarily, about inflation, but still kind of caution all of our listeners on the podcast that these are still really early days for the data with regards to inflation and tariffs.
You mentioned digital currency, Bitcoin in particular. Is Bitcoin the digital gold that some people think it is?
My opinion on cryptocurrency in general has evolved over time. Probably like any type of new technology has for anybody. I think what has changed is that because the Trump administration seems to be more friendly to some type of advancement to crypto with regards to the US economy. We've heard Trump and his team talk about a Bitcoin reserve fund, which might kind of evolve into just a general crypto type of reserve fund. The Trump family has their own meme cryptocurrency out there. So, whenever you have the president kind of talking up something, it brings more kind of momentum to the sector. There has always been a correlation between social media and cryptocurrency. They seem to move together. I would say in general over the last couple years is that trades with the main cryptocurrencies and Bitcoin would be the most significant one, have very much kind of followed the market. So if we've had the markets risk on, where risky assets were advancing, so did Bitcoin. Whereas when we saw risky assets draw back, Bitcoin would kind of participate. I think what has changed, in my mind at least, is that we see the involvement of big institutions into the Bitcoin space ramping up. Now, I don't want our podcast to be something that all of a sudden encourages people out there to go out and buy Bitcoin, but certainly getting more educated about it. And I do see the kind of the end game with Bitcoin, this idea that there will only ever be 21 million coins being something that is going to be counter to this idea that these government deficits that we have continue to devalue currency. And two kind of interesting kind of points is that when we track the total money supply in the United States, we look at something called M2. And so if you were to take look at a $100 bill in the United States, $60 of that $100 bill are basically new dollars that have been added to that $100 bill in the last 30 years. That's kind of how much the money supply in the United States has gone up. And so all things being equal, if the US dollar wasn't the world's reserve currency, you'd expect the US dollar to have weakened considerably over time. It hasn't. So, the question will be is, what happens to the US dollar long term? We've seen the US dollar weaken against a basket of global currencies, including the loonie, really since the global trade war began, and companies or countries have been thinking more about themselves, have been very internal. We've seen, a focus on sovereignty, and I was looking at something with beef prices, something really interesting. So, if you go to pick up a ribeye these days and see how much you're paying for a steak, it's absolutely outrageous, right? This is homegrown here in Alberta, the best beef in the entire world. And so it should be expensive, but I think we still get flabbergasted by how expensive it is. Well, an interesting fact that I was not aware of is that the beef herd in the United States is about 8.5 million head of cattle. Well, that's about the same number of cattle that existed in the United States 50 years ago. The beef herd hasn't increased, yet all of their input costs, land, food, processing, have all become more expensive. And so, if you think that beef prices have doubled or tripled in the last 10 years, is that you could draw some parallels to something like a cryptocurrency like Bitcoin. Now, Bitcoin would be different than, say, some of the stable coins out there or some of the meme coins that are out there. But when you have a finite supply and costs, so they often talk about the mining costs that are involved in creating these coins, it gets more and more expensive over time. And there's only so much, going back to the beef businesses, there's only so much land out there that you can keep these herds on. So anything that becomes rare, anything that is finite, anything where the costs continue to go up, you can see that the underlying price, that asset, you can see it becoming more valuable. So certainly from an institutional side, I think that, companies like BMO and in the United States, JP Morgan, is that they're having these type of conversations with clients to say, if we want to have something in your portfolio that, is something like gold, we know that, there's only ever going to be so much gold in the world. This isn't like artificial diamonds. We haven't found a way to make artificial gold yet. Is that there's only going to be so much gold ever. And gold is getting harder and harder and harder to get it out of the ground, more and more expensive. And the same thing would flow over to something like Bitcoin. So it's very interesting to see how institutions have gotten more involved. We continue to see social media talk it up. We now have a president talking it up. And so I definitely think that our listeners, if they haven't educated themselves on the various type of currencies, is that it's really important to come out with a philosophy of how you view it yourself and, where it might fit in your life. But certainly it's not going to be one of these things that you're going to want to wait another 10 years to all of a sudden learn a little bit more about it, because the influence definitely seems to be increasing.
Saving for college. A lot of people looking at that. Some people seeing it completely out of reach. Others preparing for it as their children are entering school age years.
So, we always kind of want to have a household item on our podcast. We have lots of high school kids are finishing up, making their plans for next year. Early acceptance for a lot of these programs now is starting earlier than ever before. The cost isn't going down. It seems like we're never going to talk about the cost of anything going down on this podcast, Terry. Everything's always going up. So, I think the Registered Education Savings Plan becomes, still probably the most flexible tool for households. A lifetime contribution limit of $50,000 to the RESP program. The government grant on that is approximately 20%. Plans can be set up for families. The grant and the growth on the grant and the growth on the capital is something that ends up getting taxed by the student as compared to the parent who's often contributing to it. The student is probably going to be in a low marginal tax bracket while they're a student, probably the years after finishing school, but primarily while they're using the money going to school, they're probably going to pay very little to maybe no tax on that money coming out of the RESP. And any money that's not used, and once the student has completed school, can actually come back to the parent, and the capital of that can come back to the parent tax-free. The provincial student loan program still exists, and those loan programs are generally interest-free while the student is attending post-secondary. And then the financial institutions are also involved in the lending game for higher education, usually something in the form of a student line of credit. Usually there's a parent cosigner on a lot of these products, and generally they're set up to be interest only, again, if you qualify, while the student is attending school. And then, once the student has graduated, no longer in school, principal payments plus interest going forward.
Very good. Another great session with you, Patrick. I appreciate it. This has been the Wealth Roundup for the week of June 11th with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns.
Have an amazing week, Terry.
This has been the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. I'm Terry Evans. The Wealth Roundup is part of the Reluctantly Podcast Network.